Of course, Africa's third largest oil producer, that's Equatorial Guinea, has now been accepted as a member of OPEC. Equatorial Guinea said way back in January that it was looking to become OPEC's 14th member, the 6th from Africa. Its membership ideally should help raise the continent's influence and profile in global oil production. Now, let's dig a little deeper into the details of exactly what OPEC decided to do today. Deji Badmus joins us live from Lagos. Daniel Ranges is live in Washington, D.C. Gentlemen, welcome. Daniel, let's start with you. Brent crude prices are falling fairly steeply in response to news of this 9-month extension. Why is the market disappointed?
Context, back in early May, the price of Brent was around $48 a barrel, and it rose to around about 53 where we have it today, because I think there was a general expectation that OPEC would act to sustain these cuts. But, you know, some I think were hoping for a little bit more, something a little bit deeper. And essentially what we're talking about here, if we look at a broader spectrum of oil production, is not so much cuts but more caps, because production went up, for example, in Iraq when it's brought in spare capacity. We've seen some other countries increase their production globally. So the big picture here is the same, and I think it would only really have gone above $55 a barrel if OPEC had done something in addition to what they were already doing.
Indeed. Deji, let's come to you. Nigeria's crude output around 1.5, 1.6 million barrels a day by end April, according to OPEC secondary sources. Could Nigeria, assuming it even wanted to take part in these production cuts, could it have taken part if it wanted to?
Not at all, Rama. Nigeria cannot do that, and it certainly would not have contemplated such an idea at all. Fact is that for a long time now, since last year, you know, Rama, that there's been crisis in the Niger Delta. And now we have relative quiet in that region. For the better part of the past 2 years now, I should say, Nigeria has not been able to pump around the 2.2 million barrels it says it plans to do on a daily basis. As you have said, at the moment, the country is doing around between 1.5 and 1.6. And the projection is that by June, the country will be able to get up to 2.2, which is the benchmark, the budget benchmark. Of course, that is when the Focado's trunk line begins pumping oil. So, and you know that Nigeria needs this oil. The country is just beginning to show sign of recovery. It is still in recession. The projection is that it will get out of recession by the end of the year. And this oil money is very critical. The only reason why the foreign reserve of this country is beginning to grow gradually today is just because we're beginning to see earnings from oil go up, just because production level is coming up, and then the price of oil too has actually gone up a bit to 53, as Daniel just said there. And something else you also have to understand is that Nigeria needs this money. We're beginning to have some kind of stability in the foreign exchange market, and the reason is just because of the dollars. I mean, the forex now that the CBN has been pumping into that market. And the reason the CBN has been doing that is just because the CBN now has a huge foreign reserve. So Nigeria can certainly not do that. It will take some time for Nigeria to recover. I mean, the whole of this year and possibly next year before Nigeria can fully recover from this recession. So I don't think Nigeria would have contemplated that idea at all. It certainly would not be able to do it.
Indeed, which brings me back, Daniel, to our favorite catch-22. The last round of cuts created room for shale oil producers, the same shale oil producers who basically essentially kicked out Nigerian crude out of the market, and they've come back very, very strongly. Is that trend likely to continue, though, all the way through to March next year?
Well, let's put a theoretical example down on the table here. So if we see, you know, global growth going up a little bit, and it pushes actually oil per barrel up to about $55 a barrel. Let's say, for instance, the energy company, the consultancy Wood Mackenzie says, if that were the case, the US would increase production by an astonishing 950,000 barrels in 2018. That would be essentially almost a third of its current production level increased. That would have a big impact, obviously, on the dynamics globally. The US is more and more able to produce for itself, but also oil exports have been going up and up in the United States, and the US has recently opened up in a bigger way to natural gas exports. And as you know, Rama, most of these new shale oil formations are able to produce natural gas and oil together. So there's a reciprocal benefit there that makes US production so competitive.
Indeed, and of course we're seeing the onward march of course, the Baker Hughes rig count, proving that point in fine detail. Gentlemen, we'll have to leave it there for the time being. Dejaban was in Lagos, Nigeria, and of course Daniel Rangers live in Washington, D.C.